Fantastic. So
Yeah.
I will just let everybody come in
Yeah.
and
Perfect.
then I'll get rid of that waiting room. Climb, just admitting everyone. Okay, fantastic. We are in and we are streaming live. Testing, testing. Let me just get rid of that. Right, fantastic. Hi, my name is Darren Joseph from HEJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor and privilege of having a fantastic conversation ahead with Ricky and Todd. Ricky, would you like to introduce yourself, please?
Sure. Yeah. So, well, my name is Ricky Gutierrez. I work at Gutierrez Pujadas and Partners. It's a tax, an international tax accounting and legal firm here located in Barcelona, Spain. And well, we're mostly focused on
Okay,
international clients, also Spanish clients. And we'll be here to kind of like answer most of your questions related to taxation in Spain and also a little bit in the US.
fantastic. And Todd?
Yeah. Hi, everyone. My name is Todd Cowan. I am a certified financial planner and executive director at London and Capital. We are a UK headquartered wealth management firm with a unique regulatory approval that spans the US with the SEC, the UK with the FCA, and the Spanish financial regulator, the CNMV, allowing us to provide regulated advice truly cross border. And as of 4 months ago, I now live right down the street from Ricky in Barcelona, Spain. So,
Wonderful. And without further ado, we're going to jump in. Now, a lot of you have sent questions in advance, and we will get to them in the order in which we receive. By our count, we have about 30 questions. Once we've gone through those, and providing that we have enough time, we can get into additional questions. So if you have additional questions that you didn't submit in advance, just feel free to add them in the chat box below. So, question number one. Who qualifies as a tax resident in Spain? And to again, this is a question that came from many people, so it's like one of those really common questions. And someone kind of qualified them that okay, my husband is an EU citizen and I have temporary residency as an EU family member. So I guess we're looking at it from the point of view of someone who may be an EU citizen as well as someone who may not be. Ricky, do you want to jump on that one?
So in terms of tax residency, it doesn't matter if you're EU or or third country individual. In terms of tax residency here in Spain and mostly in Europe, it goes by the OECD rules,
Mhm.
and there are three premises that if you do qualify for one of those premises, then you can be considered Spanish tax resident. And the first one is the 183-day rule. So if you spend more than 183 days in Spain, then you are considered Spanish tax resident. Then obviously it's the second premise. It's well, in terms of your core and economic interests. So if all your economic interests and all your incomes come from Spain, then the tax authorities can state that you are considered Spanish tax resident. And then the third one, it's the substantial present test, which means that if most of your family, your kids, your wife, your husband, if they are all located in Spain, they all live in Spain, then the Spanish tax authorities could say, well, all these people or these relatives are here in Spain for more than 183 days, then you can also be considered Spanish tax resident. So it goes by these three premises.
Okay. And to be clear, because the person also threw in a residency card, does the possession of a residency card influence any one of the three factors you've just explained?
Yeah, so basically this would be in the third one in the substantial present test. So if
Mhm.
you have a primary residence here in Spain and also your relatives are also living in Spain, then you could qualify as a Spanish tax resident.
Okay, gotcha. And hopefully whoever has that question, it is properly responded to. If not, feel free to follow up in the box below and we get to them in the order in which you send them through. Next question. So who has to file taxes in Spain? I guess it kind of follows on from the first, right?
Yeah. So basically, the people that becomes a Spanish tax resident need to file taxes in Spain. Also, foreigners that maybe have assets here in Spain, they might be subject to taxation in Spain as a non-residents, non-tax residents. So these two types of people would be the ones that qualify for taxation in Spain.
Right. And an example of that would be someone, and someone did mention that they have real estate, they have property in Spain. So,
Correct. Correct. So someone that might have a property in Spain, if they are generating rental income, obviously they will need to file a form, which is Form 210, and
mhm,
then reporting this income and paying the percentage that needs to be qualified. So it could be either 19 or 24%. And also in terms of real estate, even though you're not receiving any income, there's another option. It's by income allocation. So just for the fact of having the property there, you would be subject to non-resident tax.
okay. So just to be clear, so by having the property, and let's say that it's not being rented out. So it's just sitting there, the tax implications to that.
Yeah. So if the property is not rented out, it is treated as income allocation. So it's kind of like because of the fact of having the property in Spain, even though you're not generating any income, you need to pay a non-resident tax. So depending if you're an EU citizen, the tax percentage would be 19%. If you
Mhm.
are a third country resident, then 24%.
Wow. Okay. Duly noted. Next question, number three, is pretty broad. What types of taxation does Spain have?
Well, say in terms of taxation, I mean, we do have many types of taxes here in Spain. The most important, obviously, it's personal income tax. We also do have wealth tax. We have inheritance tax. We have
Mhm,
gift tax. We also do have transfer tax whenever you are transferring assets.
mhm,
Um, and also in terms for companies, we do have corporate tax, and then all the quarterly taxes that you could think of in terms of VAT,
mhm.
withholding taxes, this thing. So there are many taxes
There are
that
many
apply.
taxes. Now, I think we get into the all these other taxes later on, but could you just spend just a short time speaking about the gift tax? Because nobody else followed up on that, the gift tax.
Yeah. So in terms of the gift tax, it's a tax that it's dependable on each region of Spain. So it's not controlled by the Spanish government. So every region of Spain, so it's different if you're living in Catalonia, if you're living in Madrid, if you're living in Andalusia.
Mhm,
And it goes by the degree of kindship. So depending of who you're giving the money or the asset,
mhm,
uh, there might be some allowances or not. So,
mhm,
for example, in Madrid, if you are gifting money to your kids, normally there's like a 99% allowance. So basically, you pay nothing. But if we are talking about here in Catalonia, like gifting something to a relative,
mhm,
you can be subject to a tax of maybe like 20%. So if you're gifting a lot of money or property with a really high value, then you would be taxed at a really well, a very high tax will be implicated.
Okay, that's super important to know. Todd, I think the next question brings you into the conversation.
Mhm.
Will my existing US bank or financial service institution continue to work with me when I relocate to Spain?
Yeah, that's an interesting one. And the answer really is it depends, but it depends on the financial institution, and perhaps the solution that you're trying to solve for. So there are a number of U.S. banks and specifically U.S. brokerage houses that will potentially support an individual who lives abroad, but there are a number in recent years, the last 10 to 15 years, that have started to step away from Americans that no longer have a U.S. address. And so you'll catch that little nuance that I shared in the last part of that sentence. But what it's largely been related to is around the reporting requirements that some of these institutions have to maintain once an individual is living outside of the U.S. So I've witnessed this firsthand on a couple of fronts. One as a professional. I spent 20 years in private banking in the U.S. and worked in management, so I had to walk around the largest UBS office in the country in New York City and tell 185 advisors that their clients that were living abroad, unless they had some sort of predetermined amount of money, 2 million, 5 million, 10 million, given jurisdictions, they needed to find another solution. And then 3 years later, I was back in their office saying it doesn't matter how much money the client has if they're living abroad and no longer have U.S. ties in the form of an address, then they need to find another solution. So that is very common with the likes of the Wells Fargos and the UBSs and Fidelities and the Vanguards. In terms of banking on a personal basis, when I left the United States in 2018 and relocated to London, I got the unfortunate letter from Chase informing me that I needed to find another solution. So ultimately, the knock-on effect is a couple of things. And when I say it depends, it could be as little as or I guess as less restrictive as them saying, look, we'll continue to work with you, but they're going to restrict certain activity in terms of withdrawals only, no more deposits. From an investment side, they could say, we'll execute sell orders only. All the way to the more restrictive that you have 60 days to find another solution, or we're going to close the account and send you a check, which can obviously be very unfriendly for individuals that might have an IRA and take possession of that.
And just to be clear, this is not like a law or any sort of government ruling. This is just a policy position from the individual financial institutions. Is that right?
That's correct, because there are a number of institutions that will support individuals that have relocated abroad. Again, London and Capital is one of those, but there are different, and we're not a bank, but from an investment management perspective, there are other banks that are more comfortable working with individuals that might be abroad, largely in the digital space, because it's all around reporting. And if they have the software and the systems in place by which to report accurately and track these individuals. The other component is that the banks and institutions that have stepped away from Americans living abroad, it's largely because they might have other business units and dealings in other countries that they don't want to put at risk if for some reason something were to go awry. So to your point, Darren, it is very much a policy at the individual institution rather than a law. So, and then the caveat being that a workaround is maintaining the U.S. address, but we'll get into what that might mean in terms of the advice structure a little bit later.
Okay, fantastic. And for those who are just logging in, yes, we have just shy of 400 people on various platforms. And yes, I'm seeing all the questions coming in, and we're dealing with them in the order in which we receive them. A lot of people send questions in advance. We have just about 30 questions that were sent in advance. Many of you have asked the same questions multiple times or different formats. So please listen as we go through each one by one. And if at the end your particular question hasn't been answered, feel free to add it to the list below and we get to them, assuming that we have time at the end of this. We're allocating about an hour and a half. Next question, circling back to Ricky. What are I know it's really broad. What are the tax rates in Spain? And the person goes on to say, when is it beneficial for a married couple to file separately as opposed to jointly? Does that make a difference? Ricky?
Yeah, I mean, in terms of the tax rate in Spain, we go by a progressive tax rate. So depending on the income that you're generated during the year, you can be in a bracket or another one. Normally, well, it also depends. It could also change depending on the region of Spain that you're living. For example, if you're living in Madrid, the tax rate, obviously you have the federal tax, and then added to that you have the state tax. well, the Comunidad Autónoma tax. So if you're living in Madrid, probably your taxes would be a little bit lower compared to Catalonia in this case. For example, in Madrid, I guess if you go, the maximum could rise up until 48, 47%. Here in Catalonia, it can go up to 52%. So obviously, from all the incomes that you've generated during the year, over 50% taken out, it's quite a big amount. In terms of filing together or separately, it it does make a difference if, for example, one of the individuals in the couple it's earning a lot of money and the other one it's does have a really small salary, then it is normally better to file jointly, because this way you can compensate one paying like a big amount and the other one maybe having a refund or something. So normally it's better to file jointly. But if both incomes that are generated by both individuals are very similar, normally the difference will be very small, and at some point maybe it is even better to file separately. But whenever we do the calculations, obviously with technology we have, you just put in the numbers and then automatically the system says, if you file individual, you're gonna pay this. If you file jointly, you're gonna pay that. And then that's when we decide if it's better to file jointly or individual.
Okay. Kind of like the same that we do on the US side as well. Okay, that's good to know. Right. Uh, Next question. Again, this is another tax question. Generally speaking, when are Spanish taxes due?
So basically, I guess they are asking about the personal income tax. So
Yes.
the tax season in terms of personal income tax, it goes from April until June 30th. So it's 3 months that you have time to prepare and file your personal income tax.
Okay. Right. Hopefully that answers those questions. Now, I think this one circles back to you, Todd. How do my existing US account structures work in Europe? And are there any European account structures that I can utilize as an American? And as like a sort of add on to that question, they're asking, what are the specific challenges of coordinating retirement accounts like IRAs and 401ks with the Spanish tax treatment?
Sure. Yeah, so we will take this as if it's a Spanish tax resident, and so what
Yeah.
the impact of the Spanish side is, and I will I'll address it, and Ricky, you can tag on and at the end. So I think what's important here, and this is from my perspective as an investment professional, and
Mhm.
having the opportunity to know individuals like Ricky for the past few years, there is the treaty between Spain and the U.S., and then there is the interpretation of the treaty.
Mhm.
And what I mean by that is there is no reference in the U.S. Spanish tax treaty to account structures like 401k or IRA or Roth IRA. Instead, there is a recently amended section regarding pensions. And when I say recent, I think it's within the past 5 years, maybe
Mhm.
2017 or 2019. But the reason that's important is because it's ultimately up to the Spanish tax professional that you work with to be able to apply the treaty against these account structures. And I have actually seen everything from an individual tax professional treat a 401k as a pension. And again, a pension in this regard is defined as is a European pension. And so what you're trying to do is utilize as many of the characteristics of a European pension or pension in Spain as you can against the account structure. So I would say that 401ks probably tick a lot of those boxes. IRAs maybe a little less, and then Roth IRAs pretty much not at all, and would be treated completely differently. So getting back to, with that as a backdrop, getting back to the question, it's really about understanding how the tax professional in Spain is going to treat these accounts, and then therefore you can start planning around it and planning from the underlying investment in mind, because there are scenarios where ultimately wealth tax could be a consideration for the underlying holdings of this. And so again, it depends on the opinion and the way and the treatment. And so I often say, nobody's going to go to jail for owning a Roth IRA, but if you don't understand how to report it properly or what the implications from the Spanish tax authorities could mean, then it could be a little bit painful if you go to take a distribution or whatever the case is. So I don't know if Ricky, if you want to pass
Ricky?
on to any of that.
Yeah, no, I mean, I completely agree. I mean, it normally comes to the professional and basically how they have looked at the rules at the tax treaty, and for them to basically identify if this is considered taxable in Spain, if this is considered a pension or not. At least in our case, and from the consultations that we've made to the Spanish tax authorities or other ones that we've read from the Spanish tax authorities, normally we do try to consider this as pensions. However, as you mentioned, when we were talking about Roth IRAs and Roth 401ks, normally we do need to include them in this, for example, in the 720, whenever people are moving to Spain, relocating to Spain, and we also need to include them in wealth tax. And then regarding regular IRAs and regular 401ks, then we need to be very careful if those pension plans are really treated as public, if they are like public or private. And then in terms of regular IRAs and regular 401ks, normally we do not include them in wealth tax. And in terms of the individual tax, if they make any distributions, then we will need to go by if this is actually treated as public pension or a private pension. But yeah, normally we do try to go by case, because not everybody operates the same way. Not everybody obtain this asset the same way. So we need to be very careful. And if at some point the tax authorities were to come to us asking, then we would need to give them a very good explanation of why we did apply this as a pension, as a public pension, private pension, or not treated as a pension at all.
Mm-hmm. So I think that's an important point. The idea of having a pension that has been accumulated pursuant to working in the private sector versus the public sector. I think a lot of people really don't get that the law in Spain doesn't necessarily recognize both as pensions as per the Spanish rules, correct?
Correct.
Yeah.
Correct. And there's like an informative note by the Spanish tax authorities, and it determines what's a public pension and what's a private pension. And they always say that public pension, it's basically for people that have worked in this case, for the US government, either as a professor or as a federal agent, things like that. And then if you've generated this through a company that's not related to the government at all, then it would be treated as a private pension.
Right. And this is important for people coming over to Spain late in their career or having already retired. But what about someone at the beginning of their career journey, Todd? Is, setting up a Spain or European compliant pension something that you would recommend? And is that something that your team can advise and support on?
Yeah, I think that's a great question, and again, it goes back to that beautiful caveat that it depends. I think
Mhm.
what could largely be dependent upon is what this particular pension might look like and how it might be characterized from a U.S. tax perspective. So
Mhm.
there certainly are opportunities for younger individuals that are relocating to Spain and likely, I don't want to go so far as to say severing ties with the U.S., but not likely to return for maybe quite some time. You can participate in a Spanish pension plan, but you definitely want to make sure that you're reviewing how the benefits are going to be accrued and what
Mhm.
that account structure looks like. And ultimately, if you maintain your US citizenship and ultimately your long term filing requirement, how the IRS is going to treat that particular pension. And we'll be getting into kind of the idea of CFCs and PFICs
Right.
in a bit, but it's really around navigating basically punitively taxed instruments and things.
Fantastic. Circling back to taxes, Ricky. Again, you touched on this earlier, but again, just to clarify, does Spain tax foreign income? Someone is asking.
Yes. So the thing is, whenever you become a Spanish tax resident, you are taxed on worldwide income, not just Spanish income. So yes, you are taxed on foreign income. Yeah.
Okay. The next question, and again, this is pretty broad, but what tax deductions does Spain offer to US expats?
I mean, in terms of deductions, so when you become a Spanish tax resident, it doesn't matter if you are a U.S. national or you're just a Spanish national. You're a Spanish tax resident. So you get the same benefits as a Spanish citizen. So in this case, you would get obviously allowances in terms of inheritance,
Mhm.
also in terms of personal income tax, in terms of wealth tax for primary residents, all these type of allowances, you would be subject to those allowances. So basically
Uh,
the same benefits, yeah.
and kind of fitting in there is the common question that everybody asks. We get it so often. Which one should you do first? The US taxes or the Spain taxes?
So yeah, we've had this this type of question. The way we normally operate, and from what we have seen, in terms of the Spanish U.S. tax treaty, in Spain you are taxed when you become a Spanish tax resident. You are taxed on tax residency, and the fact of having to file in the U.S. it's because of your citizenship.
Hmm.
So this case, and what we do with most of our clients, it's we normally file in the US first, and
Hmm.
then you file in Spain secondly, applying what you filed in the US and what you paid in the US for the worldwide incomes. You would be able to deduct those payments in the Spanish in the Spanish tax, applying the double tax treaty between Spain and the US.
Right. And of course, under some circumstances, it may be helpful to the opposite. So, for example, like when we discuss pensions, sometimes Spain is going to tax those pensions because it doesn't accord with the definition of pensions in Spain. And therefore, we may have to invoke the treaty to apply those taxes to the US return, even though it's US source income, because the treaty doesn't allow this resourcing. And in that case, the Spain return has to be done first because we need the credits to put on the US return. So it really does matter. And I think that's where it's important to hopefully have a team that works together, like Ricky and I do on the US tax side. There's an open line of communication. We know what we're doing. We have the experience, and we're going to make sure that you're not going to be double taxed. You're not going to pay more than your
Correct.
fair share of taxes. Hmm. Okay. Next question. Todd, I think this one is for you. What opportunities exist for multi-currency investment strategies for US citizens residing in Spain, specifically to help my USD portfolio keep pace with European expenditures, given that the euro is historically the stronger currency. Todd?
Sure. Yeah,
Hmm.
well, interestingly, the dollar is quite strong right now, so it's a really good time to think about maybe moving some money into euro. But it's a great question. Um, so interestingly, once a U.S. individual is in Spain and in Europe, there's no shortage of opportunities by which to either hold euro denominated assets through your local bank or investment providers throughout Europe will typically have multiple currency line items that you can either hold or invest in. The one caveat is be aware of funds, and we'll talk about that in a minute. The interesting thing is that in the U.S. marketplace, so the U.S. Financial services landscape,
Hmm.
it's sometimes difficult to get a multi-currency approach. And I remember my days back to UBS, where sometimes you had to have an investment minimum of 5 million in order just to get into a
Hmm.
multi-currency portfolio, and then you had no real say as the owner as to what that multi-currency portfolio was going to hold. So when we're thinking specifically about individuals that have dollar as their base currency, maybe through historical earnings, and needing to potentially have euro exposure for euro expenditure, there are a few providers in the U.S. that can offer multi-currency direct security investment in dollars, euros, Swiss franc, hold multiple currency line items in cash in terms of euros and cash. Again, shameless plug, London and Capital is one of those. But the reality is that it is sometimes quite difficult for U.S. connected individuals with assets remaining in the U.S. the U.S. Citus assets to find euro denominated exposure. Now, there are a couple of potential hedging opportunities that individuals might be able to take advantage of if they're more concerned about their investment portfolio. That could be in the form of an ETF in the U.S. That might have hedging capabilities. And again, that may come with its own challenges in terms of how you get into that vehicle once you're Spanish res. But the reality is that there are a few options, and certainly more than there used to be 5 years ago, 10 years ago. But the reality is that you definitely want to seek out perhaps a professional advisor that can actually hold and or manage for your future euro denominated expenditure.
Okay, fantastic. Thank you for that. Jumping into the next question now. We're in question 11. This is an easy one. Do U.S. expats living in Spain also need to file U.S. tax returns? And the obvious answer is yes. But as a nice segue from that, obviously the president-elect has made mention during the campaign that he was going to get rid of expat taxes for Americans abroad. Do you have a view on that, Todd?
It's interesting because I had heard it during the campaign a
Yeah.
couple of times. More recently, I've heard people that feel like it's not likely that there might have been a campaign talking point. I don't know if you want to go so far as to say promise that may not be actually executed on. But the reality is that there are a number of lobbyists and groups overseas that are certainly making their voices heard to
Yeah.
try and abolish that foreign or that kind of expat filing requirement and the onerousness and the burdensome of it. So we'll see.
Yeah, we'll see. From my point of view, I kind of agree that it seems unlikely at this point for a number of reasons. I think most important for us is we think that from a U.S. government point of view, dealing with Americans abroad is less about revenue collection and more about data collection, because a lot of the forms really hinge on collecting data. And we know that it's important to the government because the penalties for failing to do so accurately are quite draconian. So that to me speaks to the emphasis that they place on it, especially post 9/11 through the Patriot Act, the implications for national security. So it seems pretty important. And then when we look at the Tax Cut and Jobs Act back in 2017, which sought to make corporate taxes territorial in nature, there were some good initiatives, but it didn't quite hit the nail on it. Not so much for certain multinationals who fit into that box, maybe, but on average, no, you didn't really get that territorial tax effect. So I think that even if some initiatives were to be launched on the individual side, it will be less than perfect for the reasons mentioned. But we'll see. Next year it's just going to come soon enough. For those who are watching this recording, we're recording this in November 2024. So who knows what's going to happen afterwards. Next question, Ricky. Again, really broad these questions. What tax forms do Americans living in Spain need to file?
Um, Boy, it is very broad. So it will depend
Yeah.
on everyone's situation at that moment. But normally, yeah, personal income tax. Depending on the assets that you may have and the region that you live in, maybe you're also subject to wealth tax.
Mhm.
And and then the other taxes would be maybe inheritance if you were to inherit something from your parents or a relative, and also gift tax if you were to get a donation or something like that. Maybe if you are to transfer an asset, maybe you're also subject to transfer tax.
Mhm.
And well, capital gains, it's collected during in your personal income tax. So basically, I would say those five types of taxes are the ones that an individual would be able to, or would be subject to tax in Spain.
Mm. And you know what? And it is pretty broad. And I'll really add that, especially if it's your first time filing a return as you arrive in Spain, is really important to get the right advice from a team that understands both. When it comes to international, I mean, there are lots of Spanish tax professionals, but unless they do international tax day in, day out, they're going to make mistakes. Similarly, there are lots of US tax professionals, but unless they're dealing with US international tax day in and day out, this is not something you can do on the side. You really have to be uh, into it because the rules are so complex. They change so often that you need to stay on top of it, right? So make sure you choose the right team to prevent having issues with
Correct.
either the Spain side or the US side. So. Next question. This one, Todd, this one is for you. It's question number 13. What are the key considerations for structuring investments to remain compliant with both the US and Spanish regulations, especially avoiding punitive regimes like the PFIC rules? Todd.
Yeah. No, this is an interesting one, and this is kind of the one that I think the more that we talk about it, the more the individuals, U.S. connected individuals that move overseas will be aware of it. I would
Hmm.
say that my first couple of years when I was living in London, remediation of this particular challenge was 95% of what I was doing. And so,
Hmm.
with respect to punitively taxed instruments, or
Hmm.
specifically PFICs,
Yeah.
which stands for Passive Foreign Investment Company.
Hmm.
For the audience, the best way to think of this is a non-US registered collective. So think of a foreign mutual fund
Hmm.
or a foreign ETF, something that is not registered in the United States. So these can be very problematic for U.S. taxpayers. And the unfortunate reality is no red light starts going off when you buy one. You don't actually know that you have a problem until you go to sell it.
Hmm.
And these are instruments, again, think of a mutual fund, an ETF, a hedge fund, a private equity fund, perhaps registered out of Dublin or out of Luxembourg, but specifically anything outside of the US. The unfortunate reality to these is when you go to sell them, they do not get the benefit of capital gains treatment in the US. So as Americans, you're tax filers for life, subject to expatriating. Um, and when you go to actually file your U.S. taxes and you report these, there will be no capital gains treatment. You will be subject to the highest marginal income tax rate at the outset, and then potentially, depending on how long you've held it, the IRS could then assess a penalty. Now, the horror story is up into the remainder of the gain. So that can be very, very, very punitive. Um, there are some reporting structures that you could possibly enter into that can be somewhat costly to help you navigate around the ownership of a PFIC. And effectively, it's where you're doing almost a mark to market election each year. You will let the IRS know how much the fund has grown, and then you will pay the tax on it in that given year for that growth. So it's almost as if you realized it, even though you. So the way that you might structure around this is direct line security purchases, either owning direct stocks or owning direct bonds. There are an incredibly de minimis amount of U.S. Registered funds that you could purchase, albeit abroad. Or the other thing is that you can navigate this by owning U.S. Citus assets. So, as an international wealth management advisor that has capabilities that truly span cross border, um, we help individuals navigate this all the time. And again, not to be commercial, but there is solutions where you don't have to worry about PFIX. You can have kind of your cake and eat it too. But this idea of PFIC really does start to narrow the permissible investment universe for Americans living in Spain. And I think just the buyer beware thing that I would leave on this message is that to to this day, there are certain institutions within Spain that will be happy to sell a U.S. tax filer
Yeah.
an investment or a structure,
Mm-hmm.
and we hope that it's because they don't know the challenges. But the reality is that it's more about getting the message out there, what to be aware of. So typically, you just want to be on the lookout for something that is a collective that holds
Mm-hmm.
multiple things in the underlying fund.
Yeah, absolutely. Just to echo what Todd has said, this is one of the biggest dangers facing U.S. taxpayers abroad. That this dreaded PFIC regime started in the 1980s under President Reagan. We're talking about between sections 1291 and 1298 of the U.S. tax code. It is draconian. It is aggressive. People have got into a lot of financial difficulty because of these mistakes. So again, speak to your U.S. Qualified wealth manager like Todd, or a U.S. qualified tax professional like ourselves, to make sure you do not get in trouble. It is an absolute nightmare. Moving on, next question. Quite a number of people have asked this one. I saw Anna. I saw you just typed this in as well. Somebody asked this before as well. What about the taxation of U.S. estates inherited by tax residents of Spain? Ricky.
So in terms of inheritance tax, obviously you're a Spanish tax resident. You will be paying taxes here in Spain for the inheritance that you receive. Because in Spain you pay in terms of the personal obligation. So basically the whole inheritance will be taxable here. But if we're talking about real estate, they are taxed in terms of real obligation. When we talk about real obligation, it means that where the real estate is located, then it will be subject to tax. So, for example, if there's an apartment or a real estate in the US, but you are a Spanish tax resident, first, this will be taxable in the US in terms of inheritance tax, and then it will be taxed in Spain. Obviously, what you pay in the US because of the double tax treaty, you will be able to deduct whenever you file the inheritance tax here. So at this point, you only pay once. So basically, this is how it works. And the only difference it's in terms of real estate. That real estate is taxed in terms of real obligation.
But other assets, so for example, like a bank account or any maybe artwork, how is that
All
different?
that stuff would be taxed just in Spain, because the individual is a Spanish tax resident. Yeah, and
Okay.
then here it would come the degree of kindship. So depending on the degree of kindship, and also the region of Spain that you're living, there might be some allowances or not. Yeah.
Okay. Understood. I hope that answers the question for Anna and all those who asked that question. Quite a few people did. Okay, next question. What are I think this is a repeat. What are the tax reporting requirements for an American in Spain? Understanding uh
Yeah, it was
yeah, I think
similar
this is a repeat.
to the one regarding where to file first, and he was
Yeah.
talking about like consolidated reporting. Obviously, there are two different two different jurisdictions, so there's no consolidated reporting. So you need to file first in one country, and then you file in the other one. Obviously, trying to apply the double tax treaty so you don't get double tax.
Okay, so we'll skip that one. Next one, trust. Question 17. Are trusts recognized in Spain? Ricky.
Unfortunately not. Trust or it's not a tax figure that it's recognized here in Spain. So normally whenever we have people coming with trust from the US, well, basically any Anglo-Saxon jurisdiction that recognize trust. But for example, if you go to Spain, Italy, all these jurisdictions, we do not recognize trust. So basically everything goes and it's the person that is taxed, it goes right to the main beneficiaries of the trust. So if normally there are big amount of assets in terms of real estate or bank accounts, all that stuff, then each part would be taxed individually to the beneficiaries. Obviously, if in the trust the beneficiaries are like 50-50, or then we will need to go by the percentages. Each asset it's taxed individually. So yeah, I know it's kind of unfortunate because it's a figure that it's used quite often in the US, and I know it's very beneficial for for US taxpayers. But yeah, we normally tell people that whenever coming to Spain, if they have trust, it is better to do some tax planning and maybe trying to
Yes.
find some other solutions, so you don't have to dissolve the trust, or maybe adding this into companies. So that's why we always recommend doing some tax planning if you have a big amount of assets inside a trust.
Ricky, I want to echo that sentiment. It's so important to do pre-immigration tax planning before arriving into Spain. It's not just having structures like a trust that are inconsistent. Remember, as you pointed out, a trust is a creature of common law. So Anglo-Saxon countries, the big English-speaking countries, I guess, or the former British colonies, and most of the world are actually civil law jurisdictions. So most of the world doesn't recognize trust, at least in the way it's constructed in the Anglo-Saxon world. There are some civil law jurisdictions that have signed the Hague Convention on trusts, like Italy next door, or Switzerland or Luxembourg. But for the most part, the answer is going to be no. So you really need to get the done in advance. And another thing is if you have structures that don't take into consideration the fact that the EU and Spain has a negative, has a list of, let's say, blacklisted jurisdictions or non-cooperative jurisdictions. It will be certain tax havens that are commonly used in US structures, but they may put you into an uncomfortable situation from a Spain point of view. So again, just to hammer home that point from Ricky, if possible, before you move to Spain, get advice rather than landing in Spain and opening up a whole Pandora's box of trouble for yourself. Okay. Uh, does this is not really a tax question, but it's come up a couple of times. Does Spain allow dual citizenship? Ricky, do you know?
Yes. So in terms of citizenship, so there's one thing, citizenship, and then the other thing, different thing, it's tax residency. So yes, you can be a Spanish national, a Spanish citizen, and also be a U.S. citizen or a U.S. Or a foreign citizen of another country. So yeah, you can have more than one citizenship in terms of Spain. Yeah.
Okay, wonderful. Number 19, coming back to you, Todd. What are the investment advice channels I can expect once I'm a Spanish tax resident? Do they understand the challenges, issues, and considerations of managing wealth internationally and cross-border? Todd, comments?
Yeah, I think this is one of those interesting queries that kind of falls into the Venn diagram of
Mhm,
advice versus capability. We kind of talked at the outset around
mhm,
individuals that and professionals that might be incredibly well versed in a specific jurisdiction, but the minute things kind of take on a lean with the view of a second jurisdiction, their advice and expertise maybe start to get a little bit fuzzy. So what
mhm,
what typically U.S. connected individuals can expect is, as I mentioned before, there may be a channel by which you continue to work with your existing institution. There may be an opportunity for you to engage with a firm or provider that is more familiar with individuals who are relocating abroad, specifically to Spain. As it relates to Spain in general, there's a pretty mature advice landscape for British expats. And the reason I'm raising this is because I think, as a lot of Americans often do, we can be forgiven for going onto the internet or to YouTube and looking for advice, and try to query certain things. And because of the maturity of the advisory market specific to UK expats, they will find a very friendly, similar sounding voice that speaks English. The challenge with that particular advice is that largely the solutions that these individuals can provide are kind of wholly unsuitable for Americans, and it falls back into that concept of PFIX that we talked about earlier. So whether it's the account structure in some sort of offshore wrapper, or it's the underlying investment, it's typically going to be problematic for U.S. taxpayers. So it's one of those things where I just would rather raise it and share. There are a few providers in mainland Spain that have regulatory approval by which to work with U.S. connected individuals. I would say that they largely only have a U.S. situs specific proposition. Probably going to be limited to ETFs, and it's probably going to be limited to dollar only. So, it is worth noting to people on this call and people that may tune in later, there are solutions that can truly span the U.S. and Spain. There is regulatory, or there are providers that do have regulatory approval to advise on both sides of the Atlantic, as opposed to being jurisdictionally provincial, in terms of the regulatory barrier and the advisory barrier. So it's worth doing your homework. We kind of talked about take advice, do your research, and find the solution that works for you and your future, not just wealth management requirements, but your planning and your expenditure, and one that probably transcends single currency.
Absolutely. I think I just want to echo this particular point that you raised. Someone who's qualified in both jurisdictions, so both the US and Spain in this context. And following from that, TikTok is not your friend. TikTok is not a reliable, licensed source of financial advice. And unfortunately, I mean, full disclosure here, our firm actually makes more money fixing mistakes than it is dealing with people who got it right the first time. And unfortunately, it's because people, they take advice and they trust the wrong sources and they end up in trouble, and they come to firms like ours to try and clean it up. But the best solution is just to proceed carefully and methodically and kind of be smart, right? If someone is not qualified and experienced in both Spain and the US, and these are the two jurisdictions to which I'm exposed, why am I listening to them? Why am I doom scrolling and clicking on their channel? It makes no sense, but hey, it is what it is. All right, so just moving down. Ricky, question number 20. So what are the succession laws in Spain? I know you touched on it previously, but could you comment a little bit more on the succession laws and enforced heirship rules, please?
Yeah. In terms of four airship rules, they do apply here in Spain. The thing is, like, this is more of a legal question rather than tax, but obviously tax at the end applies. So in terms of four airship rules, whenever we're talking about this, you can, whenever you are doing this type of process, you can decide whether to apply your national rules in case you're American, or the Spanish rules because you are living in Spain. So this is something we always ask the client first. Do you want to apply the US rules or the Spanish rules? Then once this is applied, in terms of Spain, normally for forced heirship rules, 2/3 of the inheritance automatically go to your kids in this case, in the whole Spain, except for Catalonia. So in Catalonia, only 25% goes automatically to the kids, which this is called the legitima. So they say that in Catalonia they love their kids less than in the rest of Spain. So, but yeah, this type of rules do apply here. And then in terms of taxation, obviously, when you are a Spanish tax resident, you are subject to inheritance tax. So also depending on the regions that you would be living at that time, then some allowances may apply or not, and also depending on the degree of kindship, there would be more allowances or not. Yeah, in terms of inheritance, it's a tax that it's well, both inheritance and gift tax. It's a tax that is sometimes a little bit complicated to decide what things are taxable or not, but yeah, it's something that we need to deal with, and we're mostly specified in this. So yeah.
Okay, thank you very much. Next question 21. What are the tax implications of running a US LLC while being tax resident in Spain? Ricky.
Okay, this is something that it's quite common, and it's something that we see quite often. Normally, whenever we talked about LLCs, the first thing we do to the client is ask, what type of LLC are we talking about? If it's taxed at a C corp, if it's just a pass-through entity, the way that it's taxed, it's quite different. If it's a pass-through entity, then everything at the end, the benefit that it ends up at the end of the year, obviously this needs to be included in your personal income tax here in Spain. One thing that we've seen quite common, it's people working for the LLC while being in Spain. There's a big issue for that because obviously there are some rules when you become a Spanish tax resident. Things like that you cannot be working for a foreign company in Spain unless you either become an autonomo, well, like as a freelance, and then with the autonomo fee, you pay Social Security. And then the other option, which nobody likes, it's registering the US company in Spain. This way, your salary is paid through a Spanish bank account, and then the company pays Social Security. These are two things that some people, whenever they come here, they come to us, they don't know. Obviously, you are free to do it, but if at some point you receive a letter from the tax authorities or Social Security, then obviously you will come asking to us or you will come looking for assistance. So yeah, as I mentioned earlier, before coming to Spain, always do some tax planning. In terms, you need to change the status of your LLC, and if whenever you come here, you need to register as an autonomo or you need to register the company here. So yeah, it's something that you need to be very careful if you have a foreign entity, and also depending on the type of entity that you have in the US.
Yeah, absolutely, Ricky. This is so common. And, people feel as if for some strange reason, the tax authorities in Spain are being unreasonable when this is the international standard. If it were the opposite and you're moving from Spain to the US, the IRS will do exactly the same thing. These are international tax principles that are being adopted by countries that are attractive to internationally mobile professionals like yourselves, guys who logged into this webinar today. So please, the ideal is to do the right thing and get advice in advance. But if you're already in the situation, you're already in Spain, then before it is even too late, then given the situation you're in right now, please reach out, get advice, try to correct it immediately, because this not only potentially impacts your situation, but also the company in the US they may have potential corporate tax exposure because of what you're doing. So please get advice as soon as you can. Moving through I'm on question 22. What what are the tax considerations for high income Americans with rental properties moving to Spain? So I guess rental properties in the US and they're moving to Spain. So obviously we know what the US is going to do with it. This is a US citus asset. It's going to be taxed normally. How is Spain going to look at it, Ricky?
So it's similar to the inheritance part.
Yeah.
Obviously, you will be taxed in the US for that type of income. In Spain, we also tax on worldwide income, so this income needs to be reported, and what you paid in the US obviously would be deducted in the Spanish income tax. So it's fairly simple.
Right. And let's throw a bit of spice into that one because I'm scrolling. We have something like 56 questions. I'm seeing every question, but I'm sorry we can't get to everything, but I'm seeing them. A number of people have asked about the Beckham law. Suppose I was in Spain under the Beckham rules, the so-called Beckham rules. I know that's not the proper name, but how would that impact on my rental income coming from the US?
So, in terms of the Beckham law or the special
Yeah.
tax regime, the thing is that the most important thing is that, well, there are a few requirements. So if you were to qualify, you were to get the status of the special tax regime.
Mhm.
It's that you are only taxed on Spanish source income. So basically, if the income is generated in Spain, then you will pay 24% on that income. But the rest of the incomes, so in this case, rental income that is generated in the US, this
Mhm.
won't be taxable in Spain. Because the thing is that whenever you become or you obtain the special tax regime, you are not considered a Spanish tax resident. So you are taxed in Spain as a non-tax resident. So any income that is generated outside of Spain won't be taxed in Spain.
Okay, so that is actually an amazing proposition because what you're in fact saying is that you are in Spain, and Spain typically, just like the US, would tax you in your worldwide income, but under this special tax regime, I'm only actually being taxed on my Spain source income, and the Spanish tax office is deliberately blind to everything that happens outside of Spain.
Correct. That is correct. And yeah, and it's something that a lot of people want to apply. Obviously, there are a few requirements that you need to meet whenever you want to apply. But yeah, it's something that is beneficial, very beneficial for individuals that are foreigners from Spain.
Mhm.
Uh, Even Spanish nationals that they have lived outside of Spain for a few years, when they come back, they can also apply to that. And yes, I mean, in the end, you're only paying 24% on the Spanish source income.
Mhm.
And if for at some point in the jurisdiction that you are actually tax resident, the tax system or the taxes are way lower than in Spain, then it's a huge benefit.
Mm.
And so obviously you are not subject to wealth tax. You don't need to report 720. You are not subject to inheritance tax. So there are like many advantages.
It's funny. This is one. It's huge, and it just confuses me that more people do not take advantage of this. But I guess it ties back into the pre-immigration tax planning, which unfortunately people seem reluctant to. So, uh,
Yeah.
okay. Question 23. So someone is asking about retirement accounts in Spain's wealth tax calculations, which you've touched on, but then they've gone in detail. And someone is, you shouldn't give too much personal info, but here, okay, so it's a couple and they have a trust in a given state in the US. I won't say which one. Very too much personal data. Please don't share so much. And we are both the couple 50% owners in this family trust. So the question is, when they report these assets on the Modelo 720, are they able to report 50% of the value for each of them? Or how should it be dealt with? Generally speaking, high level.
So if the trust, or if at some point it's specified that you are 50-50 in terms of the trust,
Yeah.
yeah, you should report the asset because in the end you only own 50% of the asset, so you won't report 100% of it. And this goes with wealth tax
Right.
and the same for the 720. Obviously, 720 you file assets that are above 50,000 euros. You don't need to report them, but you do need to report them in wealth tax in case you in the case that you need to report and qualify for the wealth tax. Here they were also talking about the primary residence
Yeah.
allowance.
Yes.
Yes,
Correct.
so each individual should report 50% of the asset they own, and yes, each individual would get their allowance. So it's not by couple, so it's by individual. So yeah, both of them, they depending on the region of Spain that they're living. The general rule is that you get a 500,000 allowance in terms of like 300,000 in terms of primary residence, and the allowance to be able to report wealth tax or not. Normally it's 700,000. In Catalonia, it's only 500,000. So, but yes, you only do report the amount that corresponds to you, not the total amount of the asset.
Okay, fantastic. So I'm going to skip number 24 because we've kind of touched on that too many times. I'm jumping to number 25. Could you talk a bit about the obligation for information reporting on assets held abroad when you become a tax resident of Spain, like bank accounts and stuff like that?
Yeah.
Yeah.
So the first thing, whenever you become a Spanish tax resident, so let's say that I were to become Spanish tax resident for 2025, the first thing you need to do, obviously, during 2024, you spend more than 180 days, you become a Spanish tax resident. Then during the first quarter of 2026, I would need to file a form, which is Form 720, and here it's picture of the assets that you own outside of Spain. Here you would only report the assets with value higher than 50,000 euros. So here you report real estate, you report bank accounts, you report you report shares, you have companies, well, basically all the assets with value higher than 50,000 euros. Why do you need to report this? Well, with this, the tax authorities now know what you have worldwide. But it's very important to report and not hide anything, because if at some point you were to sell a property, you were to sell the shares that you have, or the investments that you have, obviously they might be a capital gain or maybe a loss. And this will be applied in your Spanish tax return. The thing is that if you don't report this asset, then the Spanish tax authorities could say, okay, maybe the acquisition value was 0 and the selling value was 1 million. So there's a gain of 1 million whenever. So this is what we normally recommend filing the Form 720. Previously, it was there were like big fights between with the Spanish authorities and also the EU, because there were huge penalties for not filing the Form 720 or doing it wrong. But now the penalties for not filing it or maybe putting some wrong information, now it's almost none. But yeah, at the beginning, the penalties were extremely high. So this was changed 2 years ago. So
Okay. And just a reminder that it goes both ways again. So as a US taxpayer living in Spain, you still have US reporting requirements as well for foreign financial assets and foreign assets, depending on how you structure it, right? You have your FinCEN 114, otherwise known as FBARs, foreign bank account reports. You have your 8938, statement of foreign financial assets. You have 8621s for your foreign investment structures. If it is you invest in a company in Spain, depending on how much it may be 5471, it could be an 8865. So there's no end of disclosure both ways. So just remember, again, one of the advantages of dealing with a team that does international tax 24/7. They don't do it on the side. They eat, sleep, and breathe international taxes that you get this stuff right.
Yeah,
Uh,
and one thing to add in terms of the 720, it's a form that you don't actually need to file every year.
okay.
You need to file it in case there are changes in the amounts. So if there's an increase or a decrease of 20,000 euros, then you need to report it. If not, if there are no changes, then you don't need to report it again.
Okay. Uh, question 26. Could you talk a bit about foreign Social Security? How does Social Security work in Spain? So I guess meaning Social Security from the US work in Spain.
Yeah. In terms of social security, I would say it's more of a labor matter than tax, but there's a tax treaty well, there's a collective agreement between Spain and the US Social Security.
Mhm.
Uh, this person was talking about like refunds. I guess he was talking about or whenever you retire, what happens if I get a pension or not.
Yep.
Yeah, through the collective agreement, if you were to pay Social Security for a lot of years in the US and then you become a Spanish tax resident, you become an autonomous and start paying Social Security here. Yes, the Spanish Social Security should recognize what you paid all over those years in the US. But we would need to check to see who's gonna make those payments regarding Social Security. Is it gonna be the US for the amount that you paid in the US, or Spain is gonna pay everything? It's something that we would need to consider and study at that point.
Mhm.
But yes, because of the collective agreement between Spain and the US in terms of Social Security, yes, the Spanish Social Security should be able to recognize at least most of what you paid in the US in terms of Social Security.
Right. And just to add to what you're saying, so we're talking not about the double tax treaty, but the totalization agreement that's signed. I
Correct.
guess a sign of the special relationship that the US and Spain have is that they've signed this totalization agreement. The US does not sign this agreement with every country. Very few special partners are selected for the totalization agreement. So it makes it quite convenient for a mutual recognition of inputs into each other's system. So again, if you have specific questions related to that, please feel free to reach out to Ricky. Now, there are a whole bunch of other questions. So there's another question that we got. Sorry, the person with the Denmark, Spain question, it's way too detailed to cover on something like this. It's very unique to your family. So you'd probably want to reach out to us separately on that. We're looking for questions that are a bit generic, and this is very peculiar to you, and it's, a lot of personal details maybe disclosed. So we're gonna skip that one. Just scrolling through for a couple questions that are in one of the chat boxes below. Uh, this is an interesting one. So Madeline is asking, they've been in Spain for a while and they've been living under the Beckham law, which is good. So you did your planning. This is Madeline she's already scoring big, high marks in our books. So okay. So it's going to expire in a couple of years. So what should she be thinking about as that expiration date comes along? Ricky.
Okay, so obviously, well, we don't know how many years left she has,
Yeah.
but it is good to do some tax planning or at least to start thinking what's going to happen after this expires, because obviously when this expires, you become a Spanish tax resident and then you are subject to all those taxes that we were talking about. Normally, because we have obviously clients that are subject to the Beckham law, we normally try to recommend, if possible, if this person has investments, to try to work with a company. So maybe the fact of incorporating a company here, then using this company for for investing, basically using it to make some profit, because obviously the fact of working with a company, normally it's more beneficial that just doing everything as an individual. The thing is that whenever you work with a company, if you have assets abroad, obviously I would recommend transferring or doing all this tax planning before you become a Spanish tax resident. The thing is that whenever you work with a company here in Spain, one of the options would be maybe adding yourself a small salary from this company, a salary that you can kind of like play with. So this might be maybe your only income, and then the other income is generated through the company. Because obviously corporate tax in Spain, it's 25%, but the first 2 years the company is incorporated, it only pays 15%. So it's a big advantage. So yeah, I would suggest maybe the fact of trying to work with a company and then playing this with the salary side. Also, if you were to give a lot of value to this company, whenever you are receiving a salary from this company, if the salary is more than 50% of the income that you generate, then the value of the shares that you have in that company automatically become exempt from wealth tax. So if the company has a real, well, has a big value, then you may be able to not have to add this into your wealth tax. So 100%, I would recommend doing tax planning if you have assets and things outside of Spain. If you need to sell stuff, if you need to move properties or relocate properties in terms of companies, things like that, do it before you become a Spanish tax resident, so you don't get taxed here at least.
Fantastic.
Yeah.
Thanks, Ricky. Todd, this one might be for you. Maria is asking, I've heard that as a Spanish tax resident, I cannot hold certain types of US investments. So this is the other way. Can you explain what those investments are? And if I already have some of them, should I be concerned? Todd?
Uh, yeah, no, it's a good question. I kind of
Mhm.
alluded to this before, but
Okay.
didn't take it head on. So this
Hmm.
kind of falls under the idea um, of perhaps ETFs or certain mutual funds.
Right.
So within the European Union and MiFID regulation, there are more stringent customer disclosures requirements that when you enter into certain financial transactions, you're provided with um, a, a, a very detailed list of information so you can make an informed choice. And this is everything from potential expenses over a 10-year period. Um, and I believe there is something called a KID document that is a specific document that the U.S. Has said they are not going to provide. So, like U.S. securities in the form of ETF industry and certain mutual funds. So, the what I think we're talking about here, Vanguard ETFs is an example, and I just had this recently where a client onboarded with us. They transferred their entire portfolio over in kind or in specie, meaning they didn't have to sell it down. But unfortunately, a couple of Vanguard funds would not transfer over because this individual had a Spanish address. And so
Mm,
Vanguard says, we are not going to continue, or we're not going to affect this transfer. We will allow the client to sell down these assets at the existing institution, but we're not going to, make their life easy to continue to maintain it because they don't want to be seen, Vanguard, that is complicit in maybe violating these European regulations with respect to disclosures to clients. So that is now there in terms of getting out of it. I think that's more of a consideration for whether you no longer find the fund suitable, maybe the tax implication that could be part of it, and ultimately if the underlying fund is creating a barrier for which you to continue to own it. And then I would say there is, I don't want to say a workaround, but this is caveated with the fact that we're talking about retail clients, and in the European Union there are three definitions of clients. There's retail, there's professional per se, and there's institutional and professional. Professional per se is where you, as an individual, can elect to have professional status, and therefore perhaps the protections that might be afforded a retail client in the form of um, you know, being able to, I don't know, recover money if advice isn't suitable, something like that. If you were to elect to become professional per se, you would be able to enter into some of these investments.
Right. Mm-hmm.
Because professional per se is not required to receive those same documents and disclosures that are required of the retail clients to receive. And therefore, some of these investments would then be allowed to be held.
Right, because you're considered to be more sophisticated, right?
That's correct. Yeah.
Okay. Okay. That makes sense.
Kind of opting out of those protections that a retail client has.
Exactly. Okay. All right, great. Thanks a lot for that. Ricky, a question from Rudy. Rudy's asking, this is about the forced heirship rules. So what if you don't have kids? Does your estate automatically go to your spouse? And does that get a lower inheritance tax rate? And they have some personal details, but any comments on that?
Yeah, if no kids, then yes, everything would go to your spouse. And yes, then in terms of the degree on kinship, then some allowances would apply. Here in Catalonia, if they are living in Catalonia, then the allowances are for sure less than in other regions of Spain. While if, for example, it was in Madrid, then 99% of the inheritance would be exempt. So yes, it depends. In terms of gift tax and inheritance tax, it always depends on the region of Spain that you're living in.
Okay, fantastic. So I think we can draw a line on it there. Sorry, I know the questions are coming fast and furious, but we have to draw a line sometime. But fortunately, Todd and Ricky and myself are available. Todd, let's start with you. If someone wants to reach out to you and consult with you, what's the best way to do so?
Yeah, you can either reach out to me on LinkedIn or you can reach out to me via my email address at Todd, Todd, dot COWAN at London and Capital, all spelled out, .com. We also have a website, London and Capital, and the and is very important. Make sure you do not forget the and or the ampersand in our name, because there is another institution out there that had some financial, unrelated to us, that had some financial troubles. And you want to make sure it's London and Capital, and you'll be able to find me.
Yeah. Okay, fantastic. Thank you. And Ricky, lots of people are asking for you, especially Rudy. Rudy's asking multiple times. Go ahead.
In terms of myself, I mean, you can
Yeah.
also find me on LinkedIn, and also you can send me an email directly. My email is ricky@gpasoc.com. Ricky, it's RICKY. And you can also find me on our website. I mean, we do have a website with Gutierrez Pujadas and Partners in Barcelona. So you can send an email to our website. You can send a consultation to our website, and obviously me and my team will be able to reach out to you, and hopefully we'll be able to help you with any issues that you might have.
Thank you very much. And my name is Darren Joseph, htj.tax, and we'll see you next time.